Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on understanding investment in stocks. Investing in stocks is a good way to build up wealth over time. Understanding how to invest intelligently and with persistence over a long period can yield impressive returns. Primarily, understanding how the stock market works is important, followed by your investment goals, either short-term or long-term, and your risk appetite, if you can handle a lot or just a little bit of risk. How do you make money from stocks? You can make money from owning stocks when the share price increases or when the company pays dividends. This can be an interim dividend before end of the year, but often half year, or final dividend at the end of the year. The dividend paid per share divided by the cost of purchase per share will give you the dividend return on the stock. Why does stock prices fluctuate? The stock market works like an auction. Buyers and sellers can be individuals or organizations. The price of a stock would go down when there are more sellers than buyers, which means you can lose money. On the other hand, the price would go up when there are more buyers than sellers, hence making a gain. A company's performance does not directly influence its stock price. Investors' reaction to the company's performance decide how a stock price fluctuates. More people will be interested in owning the stock if a company is performing or expected to perform well, consequently driving the price up. The opposite happens when a company underperforms. When purchasing a stock, it is good to understand the business of the company and specifically follow any news on the company and its quarterly financial performance. Investing in stocks. Investing is not trading, which is short-term, and has a vastly different goal like trading. Investing is about taking measured risk for distinct period of time at sufficient volume to generate profits, and typically involves wild swings in profitability. Investing is about minimizing risk to generate wealth over the long term, not generating short-term profits. Investing in stock can give unlimited gains, while losses are limited to the amount invested compared to fixed income, with limited return potential and reduced chance of losses. You should also seek the advice of investment experts before selecting your stocks. Quoting Warren Buffett about long-term investing, only buy something that you would be perfectly happy to hold if the market shuts down for 10 years. If you are not thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. When selecting stocks, you can identify stocks with consistent dividend payments in the past 3 to 5 years and set aside an amount to invest monthly. Also, consider the potential for growth based on the business the company does or the sector the company operates. Your investment can be as low as 1,000 Naira monthly. Imagine you are consistent with this over 20 years. Your portfolio worth would have grown significantly. Apart from helping you to save, you are also building wealth for your future or retirement. Diversification of your stock portfolio. Diversification is very key. It is the process of allocating funds in a way that reduces your exposure to a single stock. That is, avoid putting all your eggs in one basket if you are investing for long term. This is to avoid any significant loss if a company fails or declares an underwhelming performance. Diversification should also apply to sectors. For instance, you should not have all your investment in the banking sector. You can spread across other sectors. Also, stocks should not be the only form of asset in your portfolio. You must diversify across fixed income instruments, dollar-denominated assets, mutual funds, and alternative assets. You can also invest in foreign stocks, but you need to understand its workings due to its high volatility. Beyond the return on investment, it's also a form of hedging your investment against Naira depreciation or devaluation. Moreover, you can consider investing in a stock-based mutual fund with impressive past performance if you don't want to bother about following the news and financial performance. This responsibility will be moved to the fund manager at a fee. It's good to note that investment in stocks can start with as low as 100 naira, as several stockbroking firms now have online platforms that enable you to take control of your investment. That is, fund and buy yourself. The platforms also enable you to follow the happenings in the market. You can sign up with any of them. If you have invested in the past and cannot trace your investment and have never received dividends, stockbroking firms now offer services at a fee that helps you resolve this. Kindly reach out to your preferred stockbroking firm. In conclusion, if you have lost money before in the stock market, we think you should not give up. See this as going into a business that went wrong, but you would have learned a lot of lessons on how to do it better. You can approach an investment expert and start gradually again. In this era, when the return on fixed income is near zero and inflation is over 15%, you need other investment to bridge that gap. Again, quoting the stock market guru, Warren Buffett, the stock market is a device for transferring money from the impatient to the patient. Thank you for listening. Please join us same time next week for another exciting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.